Okay, everybody, welcome back. This is part 2 of today's weekend video review. This is a video that is part of the FibStalker analysis and trading service. It's the weekly review part 2, and today is February the 18th, 2018. Okay, so as usual, the disclaimer, as mentioned before, please review it and accept it. So let's get back and let's look at some of these markets. Particularly now, in part 2, I want to focus on the main and others market. We'll start from the Australian dollar, Canadian dollar, and this market in the past, this market has been basically moving in a range here since basically 2013, as you can see here. Now, most recently, though, the last part of 2015 here, we traced the lows to highs, and this market has initially respected this level, has failed the level, and then started respecting this level again. Although was not able to get into that first target of the failed setup here, this is a busted setup, the market came back and respected again that area. So the 96.62 is real. The reason why is not consistent. There may be other reasons for that, like for example dump money, for example, or any other, or news, or any other motivation. But whenever then those levels are respected, those areas are respected, then we need to take them into consideration. Now, in here we had a mood lower, we had a reaction from the 99.63 that pushed price lower a little bit here, but now the price is coming back, and the price has traded it has traded 50% now from lows, December lows to recent highs here at the end of December. And this market has found participation. Okay, so at the moment, what we can say about this market is that it's moving from 97.93 to 99.63, and we'll need to see whether this area is going to offer resistance again. Okay, so that's what we can say about this market. The this market has not been technical enough, and we will expect this on the smaller time frame for the Australian dollar, Canadian dollar, but we know exactly where the levels we have to watch are. Okay, so next is the Canadian Japanese yen, and this market, on the other hand, we know very well that this market had a 50% short above price that has been tested twice. Okay, so there was a possible indication for a continuation lower here, and that's what we have seen in this market. Okay, so when we look at the daily, we can look at the sequence of measure move, and this is important because we can try to understand what's going to be the next measure move here. And we have two levels that we have to watch because they both have traded, as we can see here. The higher level is the given by the 88.18 anchor, okay, and the lower level is just in the same area, and both these two setups have had algorithms participating, which also took price, as you can see here, at first and second target. Okay, now the most defensive move is from lows to whatever new lows here. So if we get a bounce, remember that the weekly are not likely to come back into this market until we get down into the 81.86. But now, because the 61% level has pierced, this could actually trigger a profit taking here. Okay, and this profit taking could actually push this price much higher here into the next measured move short. So one level definitely to watch is going to be this 86.13 area here. If the market comes back into this area, then we can actually time and test this level at 86.13 and take an opportunity short here into 83.68 and then 82.41, helping price into that larger level, the 81.86. All right, so euro, Australian dollar is the next market I want to review, and this market has found support at extension long here that is visible on the weekly time frame. The market held within that area, which was also previous highs here. So it was a support area as well, but we traded it not because it was a support area, but because it actually held this area, which is an area of participation long. Okay. Now this market has moved very strongly here for 3 weeks. 3 weeks ago here, and after that, you know, we initially we consider different levels here, and the you know, the one of the traces is this one that is the one that we took in consideration last week, that has traded here and has retested. Price has printed higher highs, and remember that there was some profit taking within the in the area of this first target here, and we're seeing something similar potentially here. So the 56.25 has been tested twice, and so a third test could be solid, which means that if this market comes back and test again this 56.25, this could be an opportunity for a continuation higher. So this is what we see in this market. Euro pound, you have probably listened me complaining about this market, although we cannot complain about the market because the market will do whatever it needs to do. But it's a total nonsense at the moment. It's moving below a resistance that 90.24 in a range with bias and bearish bias, and whenever, you know, this market will start moving, there'll still be congestion here, but then after that, if this market starts moving lower in here, there could be, you know, opportunity for a large move here into 081.20. Okay, so this is the potential for this market. This is where this market could actually move to. So we will see if that happens. In the meantime, total nonsense, and in fact, I'm not going to spend a lot of time on this market because I don't want you to you know, be trading something that does not have a hedge and can really you know, just put us in trouble. So there are other markets we can watch, another opportunity we can take. Now, Euro Canadian dollar, you will remember that we were waiting for that those targets to beat. Now this area here, these levels here, the 56 and the 55.90 and 56.02, they kind of line up, and they are the first target of this larger 50% as well as the inner 50% here. Okay, and so this is significant because, you know, there are multiple different classes, different groups of algorithms taking profits at this level. In fact, we saw that at the end of last week, and we're seeing this at the beginning of the week here. Now this market seems extended, so what we're going to do, we're going to trace an extension long, and we'll see whether the market stops there. But this market could also come all the way into the 50% long, which is a little bit lower here. Okay, now the other moves here are still valid because there are second targets above. The closer second target 159.45 is the second target of this move here. Okay, so we're not going to remove that, but this market could see some profit taking here. Okay, and at least into, If we look at the if we look at a sequence here, 50% sequence from lows to highs here, that first target might be hit. We need to double check that, but this market could come and test the next 50% first. So it's likely this market is going to get there. We need to understand whether it's gonna the level is going to hold or not. Okay. So euro, this was the euro CAD, euro Japanese yen. It's reacting lower here. This market has been on this crawling mode here, moving higher, and it has broken shorts, but it might be might have started a correction here. And from lows to highs, we had this level that has not held, but it's a busted setup, and so this market could actually move lower very quickly. The first level of support is going to be the 130.74. If the market does break the 29.14, then what we are going to see is a lows to highs here, and that's what's going to trade here. Okay, so these are the two levels that we have to keep in mind for the euro Japanese yen on this very large time frame. On a smaller time frame, we have seen this market trading in a very extended way here, and it has initially traded at 50%, and market moved into its first and second target here. Okay, so when we look at the wall move here, the next measured move was lows to whatever lows here, and that has failed. Okay, so that failure means that all this trend has failed. It doesn't mean that this market cannot continue lower, but we could also see a reaction higher, and in that case we'll need to understand what's the anchor is going to be, and we'll see whether that anchor is on the daily or on the weekly. If it's on the weekly, it might be a very limited correction higher. Okay, so we'll need to wait. This market is not as it has been technical on a larger time frame, but then on the 4 hour, as you can see here, it is much less at the moment. But that's usually not a problem, because if a market is not technical, we just leave it alone. Okay, the euro New Zealand dollar has respected this 50% short. There were I remember people a few weeks ago talking about a reaction higher of this market, but when you see these few weeks green bars here moving higher, but then we need to look also at the structure of the market. We knew that there was this 50% here that's been tested once, twice, three times, and now last week this market started moving lower. Okay, so if this market continues, we know that the first target is around the 160 to 80 area here, and there is the potential also for a full retrace into the halfway back here. Now the halfway back in a range typically does not hold. We'll see. You can see here, but this is good news, because this market could continue lower here into 160.06, and then we'll need to test there what happens. Okay, so if this market comes back and offers an opportunity for a 50% short, this could be a good opportunity for a short here, and I'm going to trace the actual trace on the daily is going to be this one. Okay, so we need to watch the 168.85 level. That's what we need to look at in this market. If that trades this week, what we could see is a test of that level and then a continuation lower. All right. So pound versus Australian dollar, this market has had a reaction higher since the beginning of the year. As we can see here, this was an extension along 171.36, and price also traded the market also traded an inner 50% here from lows to highs, which brought price into that first target. And if you make the case at 168.63 as traded here, the high was 160.78.57. It's 6 pips. So if you make that case, the lows to highs here came into play, but then the next level failed. Okay, and the market came back to trade this 167.02 again. Now, because the wall trend has failed here, that's the reason why this market is trading shorts. Okay, and so we need to be careful here. If you're still long, you have to be careful, because the whole sequence here has failed and this market has started trading short. So the trend failed and the market went to trade the 50% short now. Okay, so we could see a continuation lower in this market, which would suggest that the pound moves lower as well, or the Australian dollar is much stronger than the pound, and that could happen if the dollar index starts that correction. A pound versus New Zealand dollar, the GBP, New Zealand dollar here, and this market is a bit weaker than the pound versus Australian dollar here, and although the bears have not held here this market is basically moving currently laterally on top of this support, and that was the support 187.14. At the moment, bulls and bears have failed, as you can see here, so we could see this market continuing moving within this area here before resolving either on the upside or on the downside. If it resolves on the downside, this is going to be a second test of 187.14. Okay, so we would need then to test that level. Pound on Canadian dollar. This market has also traded weekly here, that we can see here the 168.31, and there is also an inner measure move, which is an extension here. And that's from 170.28 to highs, and that level has traded in here on February the 2nd, and the market has targets above in the 177.80 area here, and we will see whether this market will continue higher. The daily here has been pretty extended, and one way to model that is to use a jumping extension here, 173.18, that also gives us targets above. And again, if this level is retested, that would be a second test. We'll need to test that level, but that could also hold this price, because remember, there are setups on the larger time frame here. Okay, and when that happens, algos, they want to keep pushing this price higher into these levels, into the target levels. Okay, so on the smaller time frame here, the daily, this market has moved laterally on top of support, and that support could be retested. Okay, the most probable conclusion of this market dynamics here would be higher into 177.80. Okay, that's where you would look into and look for in this market. Okay, that's the area where the algos on the larger time frame want to push this market into. Pound versus Japanese yen, which is also highly followed pair here. We had this 50% and the market went into that first target, and the on the monthly we would have the second target was never reached. We would have the next measure move. Okay, that's one level we have to look at. That's the 146 area here, 146.08, 146. That's the level that we are looking at. It's just the next measure move from lows to highs, and 146 eventually here it is very possible it's going to be tested. Now you figure the reaction here is very similar to what we were seeing, I believe, in the Canadian Japanese yen and Euro Japanese yen. All these markets might actually react, and they're gonna we need to, and but they have kind of weekly participation only below current levels, and so we will need to look at finding the anchor that actually best fits any reaction. And as I mentioned before, one of the anchor could be a weekly anchor lows to lows, which in this case will put price into 150 area, which is also previous support and resistance. So that makes this area makes a lot of sense and is justified technically by smart money, but also conventional technical analysis that we don't really leverage in any case. So that's an area to watch. Okay, so on the daily, that would be the lows that we see here on the new lows, and as you can see, this level has been tested already on the daily. It's something that we cannot see on the bar on the weekly, but on the daily we see that. So a second test of that level would be a dangerous test, but if it holds, then that would actually push this price lower. So as you can see, there are many opportunities of these markets that have targets below, and also areas participation below current levels. Okay, in New Zealand dollar, Canadian dollar, we can remove now the lower 50%. We still have two levels now, and now we can also trace the full range, because this market continues moving higher here and is challenging the partial range. So at the moment it's right testing the 92.79, as we can see here, and that's a valid level. We will need to see what happens. So it's important to the time and follow this sequence of measure moves, also on the 4-hour time, on the daily, as well as on the 4-hour time frame, because and here the potential level of failure that would signify the price resuming a move lower. It's actually 91.11 on this time frame, and during the week we will see what the level is on a smaller time frame. All right, so let's continue here with Australian dollar, Swiss franc, and this market here has been under pressure here, and we had an extension here that we traced but was never tested, and the market on the daily came to trade another extension, inner extension short here, this one, and and We need to check whether this was tested or not. The first target was tested or not. The first target is just below price here, 72.52, and the low is 72.62, so it's 10 pips. So I will not consider that tested, which means that the real level that has traded is the 74.04, and that's where algos are present there. So if this is retested, that's the level where either the trend changes here, or this level is retested, its previous resistance as well is retested, and has the possibility to bring price into in this continuation lower here into the 71.85. All right, so that's what we see here. Australian dollar, Japanese yen is in a similar situation here. The Japanese yen is strong on all over the board here, and when we look at this monthly time frame and we trace from highs to lows, we see that this level has traded. We can also trace the full range here, or the larger partial range, and we can see that and this is a better trace. In fact, this is what we have been using so far, and the reason is there was a retest almost to the pip there into that 88.97 level, and that's the reason why we are seeing this market. We saw last week this market moving very, very strongly lower here. Okay, now there could be profit taking, which puts this market back into a potential area of resistance. Again, if a daily level comes into play, then that retrace may be more contained, but there is some profit taking here, and if this market gets back into this area here, that's going to be a great opportunity for a short, and that's the 85.25 level. Australian dollar, New Zealand dollar, in the past we highlighted correctly the end of this sequence higher that was broken. This market is also in a range here, so it's not capable of printing higher highs and going into targets, and so it is correcting, and now it is accelerating that correction. And it's a very technical market. It has traded that 50%. It never came to trade back into the next measure move, and it's continuing lower here, and so eventually is going to possibly test this second target here, and then at that point we will need to see whether it's going to end there, and that is going to be the end of the move, or if it continues lower, will actually come back and give us a last move from 107.05 into 103.94. Okay, so what I'm talking about here is this price continuing into that second target, bouncing with profit taking, and then going to trade into the 107.05, and then trade into the first and second target, and that at that point will bring this price at the bottom of this range here. Okay, so it doesn't matter, this market has to behave like this, but when we are right and the market behaves like this, then there are good opportunities for multiple 20 reward to risk on such a trade if we time on a smaller time frame, and this is the weekly, so the 4 hour would actually give that kind of returns. Okay, so it's very important we keep an eye on these markets, because when we're not watching them, they will be giving us an opportunity for an entry. Canadian Swiss franc here, this market has maintained its promises. It went to trade the 50% short here that has been respected, 77.87, and then Eventually the market went to reached that 73.80, which was the initial measure move. It was not respected, respected, not respected, respected, not respected, but this might not be respected, but it was a very good target for for a trade here that has participated many times these areas here. Now 1, 2, 3, 4, 5, 6 months around this area here. Okay, and when it started moving lower, then the first area of support would be the 73.79. So that is a good target level. So euro, Swiss franc has moved lower as well. This market has respected this 50% here. Not enough to bring price into that first target. This is the first target of this move here. You remember that I was looking for a closure of this gap. You see the a big bar here, but this is really a gap. The market opened lower here and continued lower. So because that level has not traded, we can only look for again a reversal here. We can trace an inner move for sure, but we will see whether the inner move holds. For now, this market is trading an aggressive extension here. I think this might not hold. Now, what I think is not really important because the market can do anything, but this market was not capable of pushing higher into that level. It could come back all the way into 107.93. So it's interesting to see what this market is going to do. As you can see here, I traced a long here that has not traded yet. That's the all the way halfway back from highs to lows. The market might not make it there. It's very extended on the downside, and in fact this extension short has already traded here, and this has traded mid of last week and has brought price back on top of that area of support. So at the moment, longer being respected here and capable of pushing this price higher, but short also came into play and are push this price back in. So the setup is already there, 157.82, which is basically an extension short from a notable anchor from lows to lows, and that has traded, as you can see. And can you see also the advantage that the FibStalker methods have on other methodologies, like for example price action. This is a pin bar, right? But we don't wait for the end of the pin bar because we have methods to identify these levels before the fact and then timing the level. So this is a classic example where the superiority of the FibStalker methods, it's clear here because this is another bull anchor. So it is something that we would trace always almost automatically because the market is extended. Okay, so this is something to keep in mind. If you're looking to trade with this methodology. So GBP, CHF, pound to Swiss franc, similar situation, same patterns here. We are seeing the long, which is at this level 28.54, has not traded yet, and this market, as you can see here, also might be traveling into an extension short for a continuation lower. So the level to watch is the level that we had here also last week, and that's the 130.67. Okay, that's the level you want to keep in mind here. For the daily has not been very technical here. Let's see, we had a high to low, and the 50%, we had a high to low, and actually the 50% has participated, so you can see here, and then the market went into that first target and retraced well before getting into printing lows. So the next maneuver was failed, and the market came back to trade into the highs to lows again. Okay, so it's still being reality technical here on the daily, and you know, the first target lines up, the first target now of this measured move lines up with the 50% long, so we could keep seeing this market moving legend and eventually completing that completing that move lower into that first target. So that's what we have to, it's kind of a flag here, and the point is we have a justification from smart money that has traded this 132.35. Okay, so because that has traded, it is not this market might not make it into the 130.67. That's what I wanted to clarify here. New Zealand dollar, Swiss franc. This market is challenging the extension. It has already challenged the extension. Let's look at that. This is the weekly extension that we are tracing on the daily. Oops. And we're gonna see whether that is a valid level of resistance. Okay, so that has barely held there. It's now being retested. Okay, so it is possible that this market is going to break this level, and at that point, you know, we have the 50% on the weekly from highs to lows that might be retested here, and that would be the 69.15 level. Okay, so market might continue higher into this level, and then we will need to see what is going to what's going to happen there. You know, this market is moving laterally here, and I want to remove some of these levels here, and you know, the 50% here from lows to highs is never traded, as you can see. So this market is trading really extension here. If it's holding here, there's an extension below that actually could push this price higher into this range to the high of the range. Okay, and this is not, so this might be one of the areas that we need to look at, and the one that is justifying again this reaction high from within this area that we have seen in the last 3 weeks. Okay, and finally the New Zealand dollar, Japanese yen. Japanese yen again strong on all the board here, moving in a range. The bears have failed again, and as you can see here, we had a 50% supported as well twice, and this level could also now be retested. This market is in a range, so this is a confirmed range also on the weekly time frame, where you know the bears failed from highs to lows, and the bulls failed as well from lows to highs. Okay, so this means that this market is moving on top of this support, the 76.30 40 area here, 36.40 area, and it's now moving between um, between these two um, areas here, and eventually is going to resolve either on the upside or on the downside. Now we know that there is support below, weekly support below, so the most logical move for this market is going to be on the upside. Okay, so that's where this market could actually break. Okay, so this is it for the FibStalker methods weekly review. Thanks for watching, and I hope the analysis will help you uncover opportunities this week. There's a lot going on as usual, and in the daily and intraday review, I'll try to identify some of these opportunities for you. Thanks for watching, and have a great week. Bye bye now.